We are looking at our original files folder. Let's open it and then open the Baylor Associates folder. In it, we'll find the Baylor Bank Reconciliation handout. I'll open that. Now we'll go back and open up the Chapter 10 Baylor Associates file so I can demonstrate how a bank reconciliation is done in real life. Now this is very important. You need to back up and restore this original file just like you did in all the previous chapters. You've done it numerous times, so I'm not going to demonstrate it here. Before we start our bank reconciliation, we're going to open up the Open Windows list. Right now I have only the Home window open. Now the purpose of this exercise is to show you the real-life way to reconcile a bank statement or a credit card statement. Here's the book's way of providing you with the reconciliation information. They neatly tell you the bank statement's ending balance, the bank service charge, the interest amount or lack thereof, and here's where it gets very unrealistic. They tell you which deposits did not clear, and they tell you which checks did not clear the bank. Well, that's not how reconciliations are done in the real world. In the real world, you get a bank statement. And the bank statement is this one that I already opened. The same process works for credit card statements. So once you get the bank statement, you have to figure out the details yourself. So that's what I'm going to demonstrate in these videos. The reason we perform monthly reconciliations is to ensure our records match either the bank statement's data or the credit card statement's data. Very often the bank statement will have data we do not know about, such as the monthly service charges, interest deposits, checks from our customers that bounced, which means they were non-sufficient fund checks, also called NSF, collections from our customers that were paid directly to the bank, and automatic monthly deductions to pay bills such as insurance, the phone bill, etc. So any transactions that appear in the bank statement that are not in our accounting records must be entered into our accounting records. In this document, we have our bank account balance shown here in the T account. And then down here we have the bank statement. Our accounting records show, here's our accounting records. Our accounting records show that we have $4,000 and $4,095 at the end of the month. And the bank statement shows we only have $3,070. So we're going to compare the bank statement with our checking account line by line and see what the differences are. Anything that's on the bank statement that is missing from our accounting records needs to be entered into our accounting records. Now the T account is shown when I use this exercise to demonstrate manual accounting. But we aren't doing manual accounting. We are using computerized accounting, specifically QuickBooks. So let's go back to QuickBooks and check, just for the heck of it, to see if the checking account's balance is $4,095 as shown in this T account. There are multiple ways to check the checking account's balance. One way is to open the check register found on the home page. Remember, if you can't find the home page, it's company homepage. I already have the home page open. This is the home page. This is the home page. So I can click on check register, And it takes us to the check register, and it says that our latest balance is $4,095. You can also see the ending balance here, $4,095. Now, another way to get to the check register is to go to Banking, Use Register, and then you choose which one you want, and the one we're working on is the Bank of Tomorrow cash account. So that's another way to get to the same window. As you can see, the checking account has $4,095, just like our T account shows. Another way to view the checking account's balance is to open the chart of accounts, which is found here, or list chart of accounts. And here's our Bank of Tomorrow account, $4,095. So multiple ways to find the cash balance. But really, we don't need to know our checking account's balance. We only need to analyze this bank statement, one line at a time. In the next video, we'll start the bank reconciliation.